Welcome back to Financial Market Insights for Traders, the podcast where we cut through the noise and help you get smarter with your money. I'm your host, Sophia, and today we're diving into a topic that confuses a lot of new investors: commodities. You've probably heard terms like gold, oil, or futures contracts, but how do you actually invest in them? What are the risks? What are the rewards? And most importantly, how do you get started without getting overwhelmed? This is your no fluff, in-depth guide to investing in commodities for beginners. By the end of this episode, you'll understand your options, the why behind investing in commodities, and how these assets can fit into a modern portfolio. Segment 1: What are commodities? Let's start with the basics. Commodities are raw materials or agricultural products that are bought, sold, or traded. Think of them as the essential building blocks of the global economy. They fall into four main categories. Metals. This includes precious metals like gold and silver, and industrial metals like copper and aluminum. Energy, crude oil, natural gas, coal, and emerging alternatives like hydrogen. Agricultural goods: wheat, coffee, cocoa, soybeans, corn, cotton. Livestock: cattle, hogs, and other meat products. Commodities are tangible assets, unlike stocks or bonds. Their value is driven largely by supply and demand, geopolitical shifts, and macroeconomic trends. Because of that, commodities behave differently than traditional financial instruments, making them a powerful tool for diversification. Segment 2: Why invest in commodities? So, why even bother with commodities? I'll give you 4 strong reasons. First, diversification. Commodities usually don't move in sync with stocks and bonds. For example, if the equity market dips due to inflation or currency instability, the price of gold or oil may rise. That contrast can help smooth out your returns over time. Second, inflation protection. Hard assets like gold and oil often hold their value when inflation spikes. As your dollar loses purchasing power, these commodities can climb, acting as a shield for your portfolio. Third, speculation. Commodities markets are volatile, and while that means risk, it also means opportunity. For traders who know what they're doing, short-term price swings can offer real profit potential. And fourth, global trends. The world is changing. Population growth, infrastructure expansion, climate concerns, all of these trends are influencing the demand for energy, metals, and agriculture. Investors who understand those patterns can tap into long-term tailwinds. Segment 3: Gold versus stocks. Which one for beginners? All right, let's address a common debate: buying gold or stocks, which is better? Gold has been used as a store of value for centuries. It doesn't pay interest or dividends, but it holds its value, especially during market turmoil. Stocks, meanwhile, represent company ownership. They typically offer higher returns in the long run, but come with more volatility. So which should you choose? Honestly, you don't have to pick. The smartest portfolios use both. Gold provides protection, stocks offer growth. It's not about either slash, or it's about balance. And if you're ready to get started with precious metals, I recommend checking out the crystalballmarkets.com metals platform. It's beginner-friendly and gives you access to trade gold, silver, and other metals without all the complications. Segment 4: How to invest in commodities for beginners. Let's talk about how you actually invest in commodities. No, you don't need a vault for gold bars or space in your garage for oil drums. Here are 6 accessible ways to invest. 1. ETFs. These are exchange-traded funds that give you exposure to commodities like gold, oil, or agriculture. Examples include SPDR Gold Shares GLD, Invesco DB Agriculture Fund DBA, and the United States Oil Fund USO. ETFs trade like stocks and are easy to access. They offer diversification, but they may come with fees or tracking errors. 2. Futures contracts. These are agreements to buy or sell a commodity at a set price in the future. Futures are highly liquid and allow for leverage, but they're risky and require a margin account. Best suited for experienced traders. 3. Commodity stocks and REITs. Think ExxonMobil for oil, Barrick Gold for mining, or agricultural firms like ADM. These stocks can move with commodity prices and are easier to invest in than the raw materials themselves. And yes, REITs tied to commodities like farmland or timber are a real thing. If you're curious, search for a good REIT investing podcast to dig deeper. 4. Mutual and index funds. These give you exposure to commodity producing companies, offering a more passive approach. 5. Physical commodities. You can buy actual gold or silver and store it securely. It requires safe storage and insurance but gives you direct ownership. 6. Managed futures funds. These are run by pros who use futures contracts to create diversified commodity strategies. They're expensive and less transparent, but you get professional oversight. Segment 5. Oil trading for beginners. Next up, oil trading. This market is fast, global, and news sensitive. Here's what beginners need to know. Understand the supply chain, from extraction to refining to distribution. Monitor OPEC policies. They control much of the world's oil supply. Watch economic indicators like GDP growth and inflation. These impact oil demand. Start with ETFs or oil stocks rather than jumping into futures. They're safer and easier to understand. If you're serious about oil trading for beginners, take your time. Study the fundamentals. Follow the news. And never risk money you can't afford to lose. Segment 6. Futures and options know the basics. Let's get a little more technical. If you're curious about futures options basics, here's your crash course. A futures contract obligates you to buy or sell a commodity at a set time and price. An option on a futures contract gives you the right, but not the obligation, to buy or sell. You buy a call option if you think prices will go up, a put option if you think they'll go down. Options can reduce your exposure compared to full futures trading, but they still come with risk and complexity. If you're just getting started, consider practicing on a demo platform first. Segment 7. Education is everything. If you take away one thing today, let it be this: learn before you leap. There are tons of great educational resources out there. One of my personal recommendations, the Crystal Ball Markets podcast. It covers everything from metals trading to economic news and future strategies. It's smart, it's actionable, and it's perfect for beginners. Subscribe and start soaking up that knowledge. Segment 8. Trends to watch, alternative investments in 2025. Now let's talk future. The landscape for alternative investments in 2025 is heating up. The clean energy revolution is boosting demand for commodities like lithium and cobalt. Food security and agri-tech are turning farmland and agriculture into strategic assets. Blockchain tech is digitizing the commodity market, adding transparency and speed. And ESG investing is funneling money into sustainably sourced commodities. Commodities aren't just old school anymore. They're the foundation of the next economic wave. Final thoughts. Commodity investing explained simple. Let's wrap it up. Commodities are real assets with real value. You don't have to be a professional trader to benefit. Start small. Stay curious. Use tools like ETFs. Listen to good podcasts. And most importantly, stay disciplined. If you're wondering about gold versus stocks investing, trying your hand at oil trading, or exploring futures options basics, now's the time to learn and grow. Ready to dive into metals? Visit the crystalballmarkets.com metals platform to start trading today. Want expert tips in your earbuds? Subscribe to the Crystal Ball Markets podcast and get smarter about the markets one episode at a time. That's it for this episode of Financial Market Insights for Traders. I'm Sophia, and I'll catch you next time.